Welcome to our international conference dedicated to industrial estate called BGSKLAD 2026. It is my great pleasure to welcome here today at the Sofia Expo Center all of you to attend this sixth edition of our event attended by professionals in the industrial and logistics sector. This year, the topic is how the euro currency will influence the market of real estate in the region. Today, we're going to discuss actual markets and actual experience. It is our great pleasure that we have guests from Bulgaria, Greece, Romania, Poland, Uzbekistan, and other countries that you will see later on. This makes our conference one of the key international summits on this topic in the region. A special welcome to our foreign guests who will be speakers today. We are expecting Tom Karin, Janka Modžić Rzepinski, who is Director of Corinth, Poland. Jana Jovanovic, Head of Studies for Eastern Europe at Paris. Dimitris Tsoukatzidis. I did it right from the first time. CEO of Pointers Property Service CI, part of Samaras Partners Group of companies in Greece. Is okay? Before we start, a special thank you to all the companies and partners supporting this event. First of all, Lionshead Investments, who are the golden sponsor, the general sponsor, our golden sponsor, Logisoft. And I'm going to list our other sponsors, which are Eastring, Barrage Group, United Masters Architects, Trace Industrial Zone, Scorpio Security Company, Express 120, Industrial Hub. And saying Industrial Hub, you can all see the boutique model that they're going to present today. The mock-up is built diagonally from me, and these are the first models by Light Industrial offered in Bulgaria, so please visit them. Other partners, Logistics, Imot BG, Facti, and Warehouse Rent Info. Our colleagues from Serbia are here this time. Our strategic partners, Corelana, Bimax, Corowans, Vending Spot. This is the coffee that we will enjoy throughout the conference. And you can contact them if you want to have their coffee machines in your office. Mebel, Argo Prima, Mebel, Argo Prima, and our key media partner is streetelbg.bg. A big thank you to my team from Sofia and all the other cities represented here who made this event possible. But please let's give a round of applause to Pavlina Juftova, my right hand, who was a key organizer. Passing over now to our general sponsor, Lionshead Investment. And Vladimir Georgiev, the speaker, he doesn't need any introduction. All of us know him. Thank you for this kind introduction. You said chief major sponsor. Thank you for that. It is my great pleasure to be here. Thank you, Simo. Thank you, BGSKLAD, for inviting us here for the next edition, which is a nice format. And I hope that today we're going to have interesting dialogue. We'll share our successes, our challenges. We'll ask interesting questions. On behalf of Lionshead Investments, I welcome you all. And I'm looking forward to the sixth conference. Thank you, Vladimir. He will be a speaker on the first panel and will share with us a bit more about the situation in Romania. And during the last panel, he'll tell us about the state of play in Bulgaria. He's omnipresent. Simeon, you will have to order special chairs for me soon because I need bigger and bigger chairs. And now our key media partner, represented by Martin Stoiv. Good morning, everyone, at this sixth conference on industrial estate by BGSKLAD. Thanks to Mr. Mitev, we became the main media partner. Streetel BG is a web-based partner on industrial estate development. We have 6 subsections to our web page. I wish you all a successful conference and successful networking. Thank you. As any other year, we are trying to help the starting businesses, and this year we decided to support the express courier company, Express 120. Mr. Bozhilov represents it. It's the first expedition company that provides same-day deliveries. This is key. As you see, many people are late because of the traffic, so this will facilitate the daily life of private individuals and businesses. They focus on speed and reliability. Mr. Bozhilov will speak to us later. And going a step back, let us welcome a gentleman, a friend of mine, Anton Karin. I met him 10 years ago in Moscow, and it is my great honor to present him to you. He's the Director General of Greystad Real Estate. They have experience in Romania, Uzbekistan, Moldova, and Russia. Anton's presence here is a big recognition for our event, so thank you, Anton. So much for introduction. Now I would like to ask the panelists of the first panel to take their seats along with the moderator. Welcome. While we are waiting for everyone to take their seats, I have to announce that the lady from Turkey couldn't join us for personal reasons. Nonetheless, it will be a very interesting panel because the colleagues who deal with research, Jan and Diana, have extremely interesting facts to share with us. They raised the curtain yesterday at dinner, and I believe you will find them interesting as well. Passing over now to our moderator, Elica Panayotova, to introduce all the speakers. This will be an English language panel.
Due to the panelists, we only two Bulgarian outplaced by 4 foreigners, so English would be the main language. So good morning, everyone. I'm pleased to be the moderator of this distinguished panel, and with which we'll start and give the tone for the whole conference today. Mr. Mitov already introduced the guests, but I'll just go on and introduce them once again so that you know who's who on this panel and what you expect to hear from all of our distinguished panelists. So I'll start with Jan. Jan Kamoji-Czapinski is Director Locations and Incentive Strategy for EMEA of Colliers. And he's today especially for the conference to give us a perspective of how the Central European market is moving and what is there a chance for it to shift in our direction as well as interest. Then we'll have Jana. Jana, thank you for coming. Jana Jovanovic is representing CBRE, and her division is covering 8 markets, which includes Croatia, Bulgaria, Serbia, North Macedonia, Slovenia. I'm not covering all, but yeah. And then we have Dimitris. You've already seen him standing twice today. Dimitris Tsokaksidis. He is the CEO of Pointers Property Services in Greece, and they have experience over 20 years on the Greek market, consulting different government and real estate developers in the logistics sector. And Kalin Anton, who is based in Romania, but actually operates in 3 markets, Romania, Russia, and Uzbekistan. So he'll tell us about the new frontiers and what is happening on those new markets. And we have as we understood, the biggest sponsor of our event. But jokes aside, this is the second, if not already first, largest player on the Bulgarian market, Lion's Head, Vladimir Gurtiev, and they're also stepping on other markets, Romania, Poland, maybe Hungary, but he'll be able to tell us all about it in the presentation. So, Jan, I will start with you because you could give us the more global, let's say, perspective, what is happening in the Central and Eastern European markets.
Yeah, thank you very much.
If we could have the first slide.
Yeah, I actually have a few slides for you today. So thank you very much for this introduction. As mentioned, my team at Colliers is doing what we call site selection. But actually, as you will see, and something we discussed last night, it's more of a site elimination. So usually when we are picking the best location, the best site, the way we work, but obviously our competitors also work, is usually start with a very big pool of sites and then one by one eliminate those sites. And very often we are starting on a country level basis, and that's why it's so crucial for the given country to promote itself so that it remains in this competition for the remaining way. So you might have the best the best property, the best matching site, but if the country itself is going to be eliminated from the process, no one is going to get to actually see your site, and that's why it's so important to promote the country, to promote broader economic environment, not only the particular site. Perhaps if we could skip through this slide to the next one.
Следващия slide.
Yeah. So this is our approach to site selection. These are some of the factors we are taking under consideration, not all of them. But generally, we would start with location. So location is very important, especially in terms of logistics, the proximity to customers, presence of competitors. I'm speaking here about industrial site selection because of the theme of the event, but actually similar logic applies also for non-industrial projects. Then we speak, of course, about labor, and this is one of the biggest competitive advantages of Bulgaria is the access to labor, and of course also the competitive cost of labor here, and you'll see also throughout the next slides. And here we are taking under consideration. No, please go back. Yeah, we take under consideration employment rate, working age population, many other factors, labor mobility, attrition rates, and so on. Then we have some property-related factors like the cost of property, but also the timeline. And this is something, from what I understand, that Bulgaria could also improve. We were discussing during last night dinner to get a building permit in Poland, including the EIA and the building permit and start construction. It usually takes up to 6 months. And actually we have hundreds of thousands of square meters of land prepared already with building permits, with the environmental permits. So actually when an investor comes and says, okay, we would like to build a new factory in this location, the developer can start construction the very next day because they already have the permits, they already are ready to start the construction. We are working with many manufacturing projects right now across Europe. And more and more we see companies that they say, we would like to start production already this year. And show me, like this is always a challenge here, like show me properties that are ready for starting production 20, 30,000 square meters already this year here in Bulgaria. So this is also kind of a challenge here in this location. And then there are things like site conditions and public aid incentives, government incentives. It's also an important factor. So how the government is actively supporting companies. So of course in Bulgaria you have very competitive tax regime, but on the other hand not so much in terms of government incentives. So the support that the government is giving to the companies. And if we could go to the next slide. So we have the site selection tool. So actually we are speeding up the process from that usually takes months. We speed it up to weeks. To provide companies with this site selection review of all the countries in Europe, actually. And if we could go to the next slide, you will see sorry, if we could jump to the next slide. Oh, yeah, thank you. So you will see actually a screenshot of one of, this is actually a kind of the group of the factors. So we're taking under consideration like roughly 60 different factors to assess the size. This is for manufacturing projects. We can, of course, adjust the weights depending on what is more important for the given client. If it is more access to the labor or scale of the market or cost of the labor or government incentives or business environment like taxation and other factors. Obviously, the darker the color, the better. So you can see here, again, across Europe, where for typical manufacturing projects, not yet including their logistics, because in the process we also do this kind of site base. So this is more like a general overview, but then we go on the site level, and for the site level we actually take under consideration, for example, the travel time to the customers and so on. So you can see which parts of Europe are generally scoring best, and you can see that Central and Eastern Europe is generally scoring best. But I'm sure every one of you right now is looking at Bulgaria, but I would like to focus your attention on Hungary, which, if you look at the map, it's actually not the darkest color for the Hungary. Yet Hungary is one of the most successful countries in attracting foreign direct investment, or at least has been in the last couple of years. And why I want to draw your attention to Hungary is because Hungarian government is extremely successful in attracting foreign direct investment. And I think one of the main conclusions from me is you should push the government to be actively bringing those investments. And this is coming back to the first note I made today. It's a site elimination process. So if your country is eliminated at the very beginning of the process, even if you have the best location within the country, no one is going to ever see it. The foreign investor is never going to see it. So yeah, with that note, thank you very much. I have one more slide, but let's keep it for now to open for the discussion. Yeah, thank you.
Thank you, Jan. I forgot to mention that actually Jan has been in the shoes of the government at one point, representing the Trade and Investment Attraction Agency of Poland.
Yeah, I was director of the investment department, so I was the one responsible for bringing the FDI to Poland for 6 years. Actually, these were the most successful 6 years in the history of Poland attraction to the FDI. Maybe also because I was there, but no, it was actually good years for it. It was from 2015 to 2021. So these were good years in terms of foreign direct investment attraction.
Yeah, but it's very important to underline the importance not only of the business, not only of the investment, not only of the location, but also of the government promotion. So as we know, we have a new government with a record-breaking majority votes, and we hope that there's somebody in the audience listening to us. If not, we encourage the business also to push for that promotion, because site selection starts on a country level. Thank you, Jan. Jana, I'm adding just an A. Jana, could you give us more details about how the sector is doing, especially in our region?
Yeah,
Rent levels, I mean, more details on
thank you.
robustness and
Jan, thank you for great intro. So from the high level, we narrow it a bit down to the SE, as you mentioned, the markets which we cover. But the story in terms of the logistics is, I can say, it's quite similar across these, let's say, 3-4 major markets. So we are talking about a tight supply, still healthy demand, but the markets are becoming more selective. So if I would, as a researcher, I have to dig in within the numbers. So if we would talk about the vacancy rates here across the region, what I can definitely say, this region has been traditionally low vacancy rates. So I'm talking about sub 5%, or even in the markets such as Bulgaria, my colleague can support, but I believe around 2% or even lower. What we have seen in the past year or two in some of the markets, we've seen an uptick in the vacancy, but this was mostly because we had a larger influx in supply in some of the markets, and just the market needed some time to reach the equilibrium between the demand and supply, but still the story remains the same. If we take a look at the rental levels, what I can say, some of the markets, yeah, we have some slides here as well. Some of the markets here have the lowest rental levels when compared to the Western European markets. Bulgaria, and when I say Bulgaria, I mean Sofia and Belgrade are one of the markets which actually triggers this statement. For instance, Belgrade has the lowest rental levels here within the region. Sofia stands a bit higher, but if we take a look further to the west, like Zagreb and Ljubljana, then the rental levels are much higher. I'm talking about 6.57 euros per square meter, which again brings to more attractiveness to this southern part of the region, having in mind especially the competitive costs, the upgrading infrastructure, and so on. If I would touch, yeah.
Apologies, but your slide is obviously very heavy and it's loading, so they will see it in a second.
Yeah, you can just listen to me. You don't need the slides at all, so I think you'll do fine. So just to get back to the future, when we take a look at the pipeline, what I can say is that we do not expect major significant pipeline, but still I can say that the developers and investors here are being really, really careful because we are not that big markets. So they are very selective in these terms. So what we do expect in 2026 is that the supply, and I'm talking about supply for leasing purposes, will grow roughly in these 4 markets at around 4%. If we take a look at the individual markets, and what we have seen in the past year is that Croatia and Zagreb have stood out as one of the markets which have grown above 20%, followed by Serbia and Belgrade. and then afterwards we are reaching to Sofia. But I would like to emphasize again that this market, particularly having in mind its locations, its EU membership, this is something which I think, and the euro adoption will really bring it on in the future. And for the last point, I think it's important to mention that nowadays we're not only talking about the capitals, so investors and developers have been looking largely at the secondary cities. So now we are talking Plovdiv, Burgas, Koper, Rijeka, Split, and so on. And this is where actually market is heading as well, due to available workforce, available sites for further development. And I think it's very important to mention this.
Thank you very much. And the slide is on.
Yeah.
So the people don't have to jot down all
Yes.
the numbers. But I will get back to the euro and its effects. But before that, I wanted to go to Dimitris and ask what is the situation in Greece, because it has seen a pit freeze and now it's on an uprise. So tell us more. What is happening in Greece on this?
Good morning, everybody. Thank you for inviting me here. It's such a pleasure to be in Sofia for this conference. So, as you mentioned, Greece went through a crisis, so it needed to recover, and the recovery was not a single moment. So it was a sequence of credibility build-ups after the 2015 collapse. So after the 2018 bailout exit, markets began treating Greece like a sovereign again and changed the question from will Greece remain investable to how cheap it is. So we had the political shift in 2019, which accelerated privatizations, cut corporate tax, and signaled investment-friendly reforms. That after that, the FDI started climbing. So in 2023, the investment grade returned, and Greece debt was upgraded to BBB for the first time since 2010, and that unlocked passive bond flows and compressed spreads below Italy's rates. So the investment spending supported by RRF EU funds was a major growth driver, Greek economy started outperforming euro area growth. And last 2024, the state's exits from the systemic banks removed the last structural overhang, which for many was a landmark. Okay, so now in the situation that we are, Greece economy has been on its feet again. If we talk about the real estate market, since 2019 and ongoing, the market is seeing growth. Prices are getting up each year. Since the end of 2025, we start seeing a bit lack of movement, because I think the market is starting to get tired of the race that's happening. That combining with the increases in construction costs and all the situations or the things happening around our neighborhood. I mean, the wars in the Middle East, the Ukrainian theme. So it seems that we should be a bit modest about the next couple of years to see what's going to happen.
Thank you. And going back from Greece to Bulgaria, Vladimir, could you tell us more what is happening on this market, where we stand, and also what are your ambitions? Because you are growing outside of Bulgarian market already, Romania, then Poland, and as we hear, Hungary is doing quite well despite the political situation, or probably now we'll see even better results. So tell us more about it.
Thank you. I'm actually quite happy to speak about Romania because having a Romanian panelist, this is a very good example of the processes that are going through the industry. You know, Bulgarian talks about Romanian market. So I would say that things in general are quite complex because of the global conflicts and all of the uncertainties. But at the same time, once again, industrial and logistics sector show that it's very resilient and very sustainable because in the end of the day, instead of following the negative curves, the sector is showing upward trends and growing in most of the countries across Central and Eastern Europe. Of course, once again, another thing that you can definitely have as a takeaway from that is that location is still the most important fundamental in logistics. So if you are at the right place at the right time, that's most certainly a factor that will keep you floating. So in terms of markets in comparison, I would say that Bulgaria is actually performing as we were always expecting it to do, meaning that for the last 20 years we are showing a very stable and very slow but steadily upward direction, meaning that the market doesn't suffer from any drastic fluctuations in supply or demand, which is both simultaneously negative and positive, because for the business there are no shocks, there are no defaults and so on. On the other hand, the market is still very small and still very not so liquid, so let's put it this way. Our company is the second largest player in Bulgaria. And to be honest, what we can share with you is the fact that we are represented in, besides Sofia, in secondary markets across the country. And I'm very positively surprised. Maybe surprised is not the correct way to put it, but we have a very nice project in Varna, and I was not very sure how it will move forward because we're developing some new space there. And to my very positive surprise, we are at the level we don't even have a technical project yet. So we are in the idea concept stage and we are almost fully leased. Which is a very positive trend, and I would say that we are leased at the levels which are above what we have put in our financial model, which means that if you're at the right place, your project will be successful. In terms of comparison with Romanian market, and here I would like to emphasize, because in the end of the day, this is the international panel. Romania is a completely different animal. Even though I would not go as far as Romania is the new Poland because of the volumes on the market, but definitely Romania, because of its size mostly, but also location and also a very complex consequences of the stable geopolitical history of the country, which take a course, very stable course in the early 90s. The compass was showing west and they didn't change the direction, led to the fact that much more foreign direct investments went to Romania. There are much more institutional investors in Romania, which now is giving the results, because currently Romania stands at 8 million square meters of industrial stock, and it's adding roughly between 500,000 and 1 million, depending on the year, per year, new supply. And which is much more impressive, by the way, is actually the take-up, which is the most important factor for an investor. So Romania, for the last 5 years, is between 800,000 per year take-up and 1.3 million last year, which was a record year. of which 70% is a net take-up. So these are new deals, not renegotiations and of a kind. Yes, please.
While you are talking about the take-up, just in the matter of size, in Belgrade, we numbered around 100,000 and 150.
Yeah,
So just in the matter of the scale.
Yes, yeah.
So yeah.
10 times.
Thank you, sorry.
Yeah, sure, of course. Bulgarian take-up is very similar as well. In the end of the day, what we see in Romania is the fact that most of the tenants are growing steadily. There are newcomers to the market. There are Romania is taking more and more the role of the regional leader, because a lot of goods that we consume in our countries are actually coming from Romania. And here I will actually make a reference to what Jan shared. So because of the fact that a lot of things, as like the location scouts, they have these tables with a lot of checkboxes, and starting from country level up to very small and particular things related to the location, there is a huge leakage from countries like Bulgaria, Serbia, and going forward, leakage of potential clients and tenants going to Romania because it ticks more boxes because of certain factors. And this is again a result of good policy, location, of course. What else is interesting is the fact that you can see on the Romanian market how actually competition is a very positive thing for any market, because you have, first of all, you have good competition amongst the investors and developers, then you have great competition amongst the construction companies and so on. So the price of construction is still much lower than in our countries, which for an investor is a very, very important trigger. And although if you look at the macroeconomics numbers, Romania doesn't perform well last couple of years. There are also political turmoils. You know, even last month there was this month there was actually again an issue with the government. But despite of that, the sector is growing and it's very sustainable, and we see Romania as a core market for the region, and we want to invest there more and more. And from there, jumping to Poland, completely different animal, of course. Poland is a country that is performing probably better now than even some of the core markets countries. And in many ways, Poland is the guideline for us, should be. I mean, like, to see how they do things, and we try to implement the same here. Of course, the fact that Poland is next to Germany and the entire western part of the country is actually working for the German market nowadays, showing that this could be a risk as well, because there are some, negative trends. But this is very shortcoming, let's say, for in mid-term and long-term perspective. I am sure that it will be back. Of course, how big is 35 million square meters? Can you imagine? It's crazy.
You mentioned the take-up number for Romania being around 1 million. We as a Colliers industrial team, we're doing 1 million per year. Just one broker.
Just Colliers, yeah.
Yeah.
So, time to move to Poland. So we looked at the market. To be honest, there was a window of opportunity a couple of years ago where there was a huge decompression of yields, and, well, huge, significant. We missed that, unfortunately, but we're still very active there. It's an amazing market. All of the institutional investors, global institutional investors, are in Poland. So if you are in a game of development and flipping assets, Poland is the place to be. Our strategy is slightly more different. We are a long-term holder, and we would like to build a platform which will stay. So for now, Bulgaria and Romania are our core markets. Next step, Poland. Probably now with the change of political situation in Hungary, we will look in a different way at that opportunity as well. But from my perspective, what I see as development and evolution of the markets in the region, even though there are certain indicators that, of course, the war in Ukraine, the war in Iran are having their consequences, the sector is still on a positive trend. Rental levels are growing. Yes, developers are much more conservative. Nobody speaks anywhere across our countries about any speculative supply, meaning nobody is building without having at least an anchor tenant. But at the same time, this is a, I would say, positive thing, because what again Jan mentioned, it's a very important thing. What is the difference between an institutional developer and like hobby developer? We create so-called you have a land bank, and then you create this industrial park which is pre-developed fully, and you have everything there like electricity, access, and all of the necessary factors. And if a potential tenant or client comes and he says, I would like to have the factory this year, with an institutional developer like us, this is absolutely possible. So we can deliver within 9 to 12 months, depending on the complexity of the facility and the building. So I don't want to disappoint nobody, but I'm positive.
Yeah, it sounded like this, and not only for Bulgaria, but for the whole region, which is good. It's interesting that you skip the topic of permitting, but we can come back to it, because location is one thing. Permitting is very also time sensitive and affecting the timing of the project, but also size matters, and that size of the country, the market, and I will give the floor to Kalin now, because he's operating on 3 markets that are very sizable markets with different opportunities. Probably you will also say a little bit more about Romanian market, being there for many years and looking at logistics. Probably yields also matter, not only the price of construction, which is lower, but please.
Yeah, good morning. I will try to tell you things that you cannot find with Google. You know, I will just speak from the, so to say, developer point of view. I'll try to give you some insights. First of all, it's amazing to be in the Eurozone in Bulgaria. Maybe you do not feel the difference yet, or maybe you feel a small hit right now, but you will understand very soon that that's a huge step forward. And from the developer point of view, what we are doing, we always look for long-term money, for long-term capital debt. We look to capital markets. Being in the Eurozone, it will be easier to attract long-term debt for a lot cheaper nowadays, probably like 2 points cheaper than nowadays. So that will attract a lot more developers, because the market becomes more attractive financially. But that will start not today, not tomorrow. The capital market, of course, needs some time to understand that, to adapt. But you are really on the good path, I would say. Second, I have to say that probably Vladimir is the best ambassador of Romania I have ever seen in my life. And I know quite few of them, but none of them probably had such good words about their own country. Being Romanian, I can tell you that the crisis there is not for the past 35 years, but probably for the past 80 years. So since I was born, I just remember this crisis, never seen something going like straightforward. But yeah, anyhow, coming again to development, before we do land selection, we have to understand what is our market. So we look at the market absorption. So we have to understand what is the demography, we have to understand what is the purchase power. And then we make a decision. And of course, if we look only at these 3 factors, then any country in Africa will be the winner. But then if we go and look at risk assessment, okay, then we have to cross all those countries and come back to Europe. And then, okay, access to capital, long-term debt and stuff like that also counts. And probably the last, but the most important, is like the cap rates. So how much money do we get for our work? Because our life, it's our time. So you invest in a project that brings you 3%, you invest in a project that brings you 15%, you spend the same resources. So definitely investors will always put the bet on something that you cannot have low risk, high reward, but you have usually high risk, high reward. So these are the emerging markets. So we switched for the past 3 years to Central Asia, to Uzbekistan. And yeah, I put a slide here just to understand what was the driver of our decision. And you can see the population. So you see Bulgaria, you see Romania, and then you see Uzbekistan. Uzbekistan, it's almost the size of Poland in terms of population. It's like 40 million. And the demography is growing. I think last year was like 900,000 plus. So that gives us a good incentive to invest. And then if you look what we have in Romania and Bulgaria, we have probably like 1.5 million or 2 million square meters here, then about 8 million in Romania, and then we have 0.5 million in Uzbekistan with a market demand of 15 million. So the first project that we completed last year, it was 50,000 square meters, and it went like immediately to a single tenant. Now we are planning 3 more projects, and as also Vladimir said, we expect to get much better results than we have in our books. So that is the decision is, as I said, it's always like, you know, what is the reward? And then if you look at the cap rates, yes, I'm from Romania, you know, I have to love my country. But when I look at the cap rates, I understand that it's not super attractive. I prefer to go to Central Asia. Okay, money are expensive there locally, but money are not expensive if you attract them from an European bank, for example. So practically you have more or less the same cost of debt, including the risk, but still there is a big gap between your cost and the reward, so the yield. So that was what was driving us to that country. And now we see a lot more developers looking at that part of the world, especially of the Silkway, especially of the new current situation, where since the war has started in Iran, and the shipping became quite long and expensive, now everyone is looking again through the railway version, again through Uzbekistan. So the volume increase, it's like 20 times in the past 4 or 5 months. If you check statistics, that is amazing. So you have now DP World investing there in a dry port. Then there are another 3 huge players investing. So all these investments are already public. You can see what they plan, how much money they want to put in and stuff like that. So we, as a logistic developer, we understand that all those volumes will create a demand for warehousing. So we consider that we are at the right place at the right moment. I don't hide the risk, it's also there. So any change, and you know, things can go really down to drain, but you have to take it. And coming back to Bulgaria, I really see from the development perspective that you have really a great chance probably to overcome Hungary because of the position. Hungary doesn't have a seaport. You have the seaport, so the new corridor needs a seaport. And you have a lot, so to say, more advantages that puts you closer, so to say, in between Asia and Europe. So you're actually the first gate of this road. And now with Euro, and as I said, with the changes in the capital markets, I think this is the place to be. So probably your project in Varna, you have to increase it at least by 10 times. Yeah, that's what I want to share with you. If there are any questions, I'll be here the whole day, absolutely ready to discuss.
Thank you. I wanted to I wanted to ask you also to dwell a little bit on the euro more, because yesterday when we were talking with you, Jana, you were mentioning that for Croatia that made the difference. I mean, very many people are still, you saw the poll saying that the euro introduction froze the market in a way. How did it?
I saw the answers. I
Yeah,
was a
you
bit
saw the answers.
surprised. Yes.
Yeah, but we're only a few months into
Yes,
the
yes.
eurozone. So
4 months into it. I would say it's too early to have like the hard data to support it. But what we do feel is there is definitely this sentiment momentum, let's say it like that. And what usually happens, as you said, the Croatian example, and we are already seeing it actually for Bulgaria, that Bulgaria is being more on the table within the discussion amongst the investors or occupiers. So this sentiment is definitely increases, and this is what we feel. However, if I would go back again to the statistics and take a look at the investments, what has been going on since the beginning of the year, again, this is not there is no evidence about it. And in the investment volumes, we captured a couple of smaller to mid-scale investment transactions, which were again mostly for owner occupational purposes, so by the locals here. Also it just takes time. This is the answer. We're not talking about months. We are talking a bit longer period. This is on
but long opinion is not 10, 20 years.
No.
Couple of years.
But on the occupiers side, this is not a short-term leasing trigger. Again, as we've heard, the decisions about warehousing from the occupier side depend on multiple factors: locations, access to the markets, and so on, infrastructure. So again, this takes time. I mentioned Croatia yesterday as an example. It might not only be the euro, but what is definitely is that they adopted the euro in 2023. And we've been talking about Croatia for the past years as one of the most active markets in terms of development, in terms of take-up, and so on. So this has been definitely something which brought up these fundamentals, which mean that market is becoming more predictable, market is becoming more transparent. We are having deeper pool of investors, and Croatia is one of the markets here within the region which is very much internationally led in terms of investments. And these investors, I think, really do appreciate when there's no currency risk and fluctuations, which supports them to make their decisions probably faster and so on. And this doesn't go only for the industrial. So we are talking about a reduction of the financing costs, which goes for the all asset types. But if we would speak about the industrial, I do believe that this is definitely a game changer, but it just takes time, along with all the advantages which, for instance, Bulgaria offers. We already mentioned, not to repeat. So.
Thank you, Vladimir. Do you see any effects of the euro introduction, or it's too early? And what do you expect?
In Bulgaria, we have this defect of way we think. We are very black and white people. Things are there are nuances, but with the adoption of euro, there is no negative side. Let's put it this way: for people, the inflation that we see when we go to the store, yes, this is the first line of reaction is negative. But from investment point of view, there is no downside, because it's like, imagine if you're hiring a person, and in the CV you are looking for certain key things which should tick your boxes. And if you get a person who comes to the interview in a flip-flops, and he graduated from the Tutrakan Financial University, it alarms, red lights start to blink. So this regalia, being part of Eurozone and part of Schengen, part of European Union, part of NATO, all of those things are the boxes that the institutional investors are looking for. And we are not talking about the fact that this will bring some immediate effect on getting higher rents or whatever. This will create the macro environment, the ecosystem that will allow more capital to come to the country. And this is what we lack, because if you look at Poland, by the way, and I'm not saying this is a negative thing, but still, in Poland, in the commercial real estate, I think 70% of all investments are foreign investments. And in Bulgaria, I think 95% is local, regional investments. So this is what we want to achieve. We want to attract more institutional investors to the country, to create a very different environment for the institutional money, for the capital, to feel safe to come to Bulgaria. And this will create liquidity, and liquidity will result in higher revolution of the market, meaning it will be more cycles. And this will have only positive effect. As of today, if you are expecting me to say that euro has any very positive effect, no, but it will take time because it's a, you know, macro. That's why it's a macro factor.
Yeah, I just wanted to say, like Poland, Czechia, Hungary, we don't have you don't have euro there, right? And there's still, I mean, the real estate market, it was in euro anyway. I mean, the rents were in euro anyway, so it's not going to have an immediate effect on the real estate. It has on labor market. And for example, just to give you example from Poland, the Polish currency strengthened 2025 roughly by, I would say, 5 to 6%. And then if you add on top of that the growth of wages by, let's say, 8-9%, instead of, from the foreign company which is trading in euro, it's buying the products in euro, selling products in euro, but is hiring Polish worker, the Polish worker job and salary actually increased not by 8%, but it increased by 12, 13, 15%, so this is actually a big risk. But I think I agree with you that it's important from the institutional investors' point of view that this is the mental thing, and it's especially important for the smaller markets. I think Jana, you referred to Croatia, but I think also in terms of the Baltic countries, that's a similar approach, that you could see that after implementing euro in the Baltic states, also you could see much more of those international investors because for those smaller markets, I think it's much more important to have this strong European currency. So I think that's an important factor.
Yeah, thank you. Just one last thing. By the way, we had the currency board for 25 years, which meant that we actually had this stability from currency point of view. But do you know how many of the institutional investors didn't know about it or didn't care about it? We've been telling, because in Lionshead, we have investors of the magnitude of IFC, International Financial Corporation, or our major shareholder is an institutional pension fund from South Africa. But for them, that didn't tick the box. Now, the same investors, when we speak to them, although we were telling them like 5 years in a row, we are in a currency board, there is no currency risk, you don't risk anything, they didn't take it for granted, Now we say euro, okay, fine, it's done. So
yeah, and maybe one small comment on what you said. You in between the lines, you mentioned like you don't see the rents still grow. I think you would want, and trust me, you would want the rents to fall down, because actually Bulgaria is one of the most expensive countries right now, which means you're significantly less competitive. So when the new entrant is coming in, they're looking at the rents obviously as well, and if they see that the rents in Bulgaria are higher than they are in Western Europe, then why would you come here?
you're jealous. In Poland, we're speaking effective rents below 3 euro still.
Some projects below 2 euro actually. Yeah.
So, and we are happy to say that we are pushing 6 euro now. Yeah, well, we are not in the same league. So I understand fully what you're saying, but for a market like Bulgaria, we will stick to the 6 euro.
I wanted to get you back to the more macro perspective, as you mentioned, because we were discussing yesterday the different corridors and the strategic location of those retail centers, or not, sorry, logistic centers. So you have the Thessaloniki Sofia corridor, you have the Carpathian corridor, you have the Silk Road. Tell us more about these strategic positionings and how those corridors work and what you see as a potential in those. Maybe we start with you, Dimitris.
Okay, so there's an axis Sofia to Thessaloniki, but in general, it's not what you see on Rotterdam-Duisburg axis. It's mostly node-based rather than a mature industrial belt. So things are happening. What changes is border friction is structurally lower. Romania, Bulgaria have removed land border checks since January 2025. That's something that matters for trucks, labor mobility, and regional distribution. There is certainly a formal regional push. The three countries have signed on December 2025 an MOU to improve north-to-south road and rail links. So we're expecting a direct passenger and freight rail link from Sofia to Thessaloniki to resume hopefully within 2027 after a 10-year gap. On industrial real estate specifically, roughly 70% of the 35 active Greek firms in Bulgaria are headquartered in Blagoevgrad, the border region northern to Thessaloniki. And now the two anchor nodes, Sofia and Thessaloniki, are tightening. I believe Sofia's industrial vacancy was reported at a record low 2.1% mid-2025. And Bulgaria's integration to Europe's logistic network is advancing due to easier borders and mobility. On the Greek side, there is certainly logistic movement. It's visible. We have two major projects ongoing in Thessaloniki. The first one is the expansions of the sixth dock in the port of Thessaloniki, something that will change the whole frame in the port, because it will allow for ultra large container vessels to approach the port and increase its capacity from 650,000 TEUs to 1.5 million. And the second is the creation of a regional large logistics hub which is located at a distance of 5 kilometers of the Perth of Thessaloniki at a former military camp. That's an area of 672,000 square meters. So the logistics are visible, and we can add here that there are institutional or major players that are getting into positioning in Thessaloniki industrial area, Synthos, like Stream has acquired a logistics facility of 33,000 square meters, and Dedem Hellas bought from Premier Properties an asset of 24,000 square meters. So that's the picture around Thessaloniki and Sofia. I can speak for.
Thank you. And in the meanwhile, in Asia, what is happening? Because there the corridors are not relying on roads and trucks, but...
I'll tell you something. Whatever we discuss here, it matters and not really, because you have to watch China. I mean, China at the moment is the largest producer of goods, and China needs markets. So they need to move their goods to the market. And the only way to come to Europe at the moment would be by railway. I mean, to make it fast, cheap, and ecological, so to say. So what is going on right now? China is investing in a high-speed cargo railway that is under construction. It starts from China, it goes through Kyrgyzstan to Uzbekistan. That part will be already commissioned by the end of this year. The next, the train will continue going through Kazakhstan, Turkey, whatever. So we'll enter European Union. Where exactly? In Bulgaria. So as
Seaport.
I said, yeah, you are really, at the gate here. So that means a lot, again, logistic. And you have to understand that our development projects, they are like a big, huge cargo ship. So it takes a lot of time to move it. It's not like a Ferrari that can speed up in, I don't know, 2 seconds to 100 kilometers per hour. And also, we have whatever we discussed today will come to reality maybe in the next 3 years. But this big cargo ship has also a huge anchor, which is called permitting. So the 3 years could be easily 5 to 6 years. So watch the market, look forward, and whatever we plan, don't do it for today, but you have to understand what comes in the really like next 4 to 5 years. Just watch the major infrastructure projects and you will understand exactly the places where to be.
Thank you. I have a follow-up. Okay.
On the China and the logistics and the timelines as well. You know, we recently did actually couple deals with Shein in Poland, and when they come in, they want the warehouse to be built again this year. We want to start operate. When the Chinese are coming, they're like, I want to start operating this year. Single warehouse, 200,000 square meters, one warehouse within, you know, under one roof. Like, think about the scale as well. Like, when the infrastructure is here, you need to be ready, because when they come in, they're like, okay, show me the options. They actually would like to see already the, you know, by the time they sign the contract, the pillars are going up already. That's the Chinese way, and the fastest will win.
Thank you. I wanted to follow up also with another question to you, Kalin. You have survived several very big crises. Can you tell us how you would survive this crisis? Because we have the war in Ukraine, you have Iran, you have a lot of routes blocked also. And
to make the long story super short, as they say, every kick in the ass, it's a step further to progress. So you just have to accept it and go to the next one.
Thank you. And last question to you all. And sorry for skipping, but I'm being pressed from the gentleman here to end. I wanted just to ask you, how do you see AI and data centers affecting the logistics market and business? Are they fighting for the same locations? Do you see already in your experience logistic sites being flipped to AI data centers? What it is to expect in that field? And I'm starting.
Big U-turn. So anybody who has anything to do in reality with data centers knows that the factors are slightly different than just location. So let's start with the impact of AI as a product. So there is an impact on the logistics, mostly in supply chains. It doesn't have anything to do with developers and investors in commercial real estate. It has everything to do with our tenants. But anyhow, in general, from perspective of a developer or investor in a data center, in Bulgaria, we have a lot of factors that are positive, meaning first, there are not a very small number of sites that actually can deliver the power, the electrical power, which is one of the major drivers. Secondly, we have many dark fiber how you call channels, routes, whatever you call them, running through the country. Land is still available and relatively cheap, but it's a very tricky thing to consider that a country that doesn't have a huge, let's say, Amazon hub or Google hub or Oracle or whatever will attract a big hyperscaler type of tenants. And also, this is a very sensitive business because the building or the real estate behind the data center is a fraction of the cost. It's 5 to 10% of the entire project. The remaining is the equipment inside. And operating this type of facilities requires a lot of know-how, and there are large companies globally that are doing data centers all around the world. So it's very naive to think that just because you can bring electricity or dark fiber or build the building, you can actually attract a relative hyperscaler to the country. I see that a lot of companies are trying now. There are, in Bulgaria and in Romania, there are several local players that are trying to do that. I wish them luck.
I will take this question from another angle. Uh, of course, the power is important, but I would take it from another angle. We are at the verge of the age of automation and robotics. And this is Bulgaria, one of the biggest competitive advantage of Bulgaria still is the most competitive cost of labor in the European Union. This is your major competitive advantage. But the window is closing. In 5 years' time, nobody will care about the cost of labor because the cost of labor will be even smaller factor. Right now, it's one of the biggest portion in this the whole cost of operations. But in 5 years' time, nobody will care because you will have dark factories, you will have dark warehouses, so there will be no longer competitive advantage of Bulgaria. So you still can grasp it right now.
In this aspect.
You still need to, yeah, in this aspect, you still need to grasp it right now. You have opportunity. There is a new government. Go to the new government, push them because they need to start promoting Bulgaria.
Thank you.
Again, from the developer perspective, we have some warehouses built 10, 15 years ago. Due to the city planning, these warehouses are now into the area of restricted heavy transport, so they are not attractive for logistic. And we just rented actually the premises to data center operators. They did the full refurbishment. Practically, we get the same rent, and whatever they do inside is their business.
So yeah, so it's going to transform it. Okay, thank you very much. We're pressed on time. Sorry, Jana.
No, it's okay. I think everyone else said everything, but shortly from the research perspective, it's definitely about if there is a suitable location supported by power, which is needed for the data centers. And this is a big question mark for the entire region. And for instance, in Serbia, this is mostly led again and supported by the state. So we are not really seeing meaningful demand in most of the region. As I said, these are rather still long-term and strategic projects, and therefore we still do not consider it as a commercial type, like for instance logistics. They do not compete, logistics and data centers. It is a bit in the matter of the site, meaning that they are both targeting mostly the industrial zones, but again, data centers are power-led, and for logistics parks, you usually require a much larger land plot, for instance, which doesn't have to be the case for the data centers.
Okay, Dimitris.
So, Vladimir talked about hyperscalers, so just want to mention that we in Greece landed Microsoft. So, and I would like to say that if you land a flagship, that matters more than many small announcements. So you get in the map and you put yourself like a regional hub. So there are certain factors that Microsoft investment was not a coincidence. It was an alignment of several factors. I will mention briefly these factors. It's, of course, geographics, and Greece is in the middle of Europe, Middle East, North Africa, was submarine connectivity with the major subsea cable systems like Quantum Blue, and that turned Aegean into internet crossroads. So renewables and power reliability, we increased renewables to over 50% of generated power with 18 gigawatts in capacity and more in licensing. PPA agreement frameworks streamlined. So Microsoft's 2025 PPA Green Energy Agreement was with local suppliers, was among the first of its type in the region. So you need government incentives, digital-friendly reforms, accelerate permitting. We had the 10-year fast-track investment law that accelerated permitting, and with tax offsets of up to 50%, these operators gained a reduced tax corporation, accelerated depreciation of IT hardware. So all this political and fiscal stability, I mean, I'm describing things that Bulgaria would try to do as well, because it can do it and get on the map to become a power and connectivity node linking EU to Black Sea, and Turkey, of course. Okay.
So thank you. If I have to sum up, so we need power. We need actually the government to be stable and actively promoting. We need the corridors and the connectivity, the ports we have. We need the rail probably. We need to watch out for China, rely less on human labor, and use the kick in the butt to innovate.
Yeah.
Thank you all.
Let me say, just add regarding human labor. Human capital is essential, and when it comes to hyperscalers or flagships, because they need examples. Athens and Thessaloniki universities fed a steady pipeline of engineers, and the Brain Regain program helped recruit experienced staff from EU capitals. So, okay, not the labor cost, but experienced staff. It's needed for this kind of investments.
Thank you very much. And because I didn't introduce myself at the beginning, my name is Elitsa Panayotova. I'm the architect who designs those boxes. And because we cannot be creative, as you all said yesterday, that's why only the dress code could be creative. We design otherwise boxes. Thank you all for this very nice panel. And if you have questions, the panelists are here after the event.